away, boy. This is the first session, ne? So I'm gonna start. So get looking straight, like I'm gonna get in straight into like the journal entries because I explained like the first part, right? So make sure you have those notes open that I explained to you. I want. So basically I'm gonna start like just with a short summary of what we covered in our last session. So, like I said, bookkeeping basically we are recording transactions, right? So, bookkeeping is basically recording transactions, right? So as they happen, right? So bookkeeping, right, is recording transactions, right, as they happen. Um, so that's how we are gonna do the bookkeeping using a certain basis, right? So that's the main thing. So bookkeeping is recording, um, yeah, recording transactions, right? So it's recording transactions as they happen, right? Using a certain basis, right? So this basis re tlo e berekisang. So this basis it means certain accounting basis, right? So the basis that we are going to use here is the cash basis. So we are going to use the cash basis. One. So cash basis is um basis. So cash basis is so we are just recording cash transactions, right? So how it's a cash basis, like we are recording like cash transactions. One. So um re tlo shebella fela movement, like how the cash moves, right? So there are, because we are gonna be looking at the like cash fela thing, we are gonna be using things that I call cash accounts, right? So cash accounts, I get. So we are recording cash transactions. So cash transactions are the same as money movement, right? Money movement. So but wa shebella fela like gore tšhelete like e vaya wa bona. So every time we get money, so money inflow or money outflow, so every time we get money or we pay money, then that's when we record wa bona. And as a result, like every transaction around now will have like cash accounts, right? So cash accounts are basically um yeah, accounts that have money, right? Right. So it's the accounts that have money, yeah, basically, or accounts um yeah, which money is transferred to one. So it's either get account in an or like in which like we transfer that account. So there are four types of cash accounts. Ne? So the first one is bank, right? And a bank basically is where like we keep like our like operational cash. So it's operational cash mo. So what it means is that, so basically this is the main account that you're gonna use wa bona. So e ke account e ka reng they're gonna like e re tlo kenyang like tšhelete kenang mo businessing or tšhelete e tswang mo businessing. So even if you have a personal account, this is gonna be like your main account. Like, so tšhelete o receiving like everything. So cash from like the customer or everything, right? So this is the main account. And then the other cash accounts are just like there to help this bank account. Wa bona. So the main account ke bank. The second one ke petty cash, right? So the second one ke petty cash, right? So this is just an account for baby tsang physical cash, right? Physical money, right? So ke bua ka like coins and paper money. One. So if let's say you withdraw money from the bank, that money you have to show or like you withdrew the money. Let's say you withdraw 1,000 from a bank, then obviously you have to show or you took out the money from the bank. Waking up like now you have it like as petty cash, so you have physical money more in one. And then the third one is an investment account. So investment account. So sometimes charity like you invest it, right? So investment account. And then the third one is savings account, right? So savings account. Mara, you'll see the main account that we berekisang ke bank, you'll really see these ones like it's rare or one number 3 and 4, right? So the main one is gonna be bank and petty cash because some customers pay like a cash physical money, right? And the one in ko bank is the one in a bank account, not the physical money, right? So those are the basic accounts that we start with. One. And then now the, this is the first important thing that we do, right? And then the second part, that thing I already did it the last time, which I explained. So it has a two part. So the first one, the accounting equation. I guess. So firstly, assets are equals to owner's equity plus liability. I did explain that accounting equation. That's something that you should know for now. Feel like you just have to know for now, um, because we are gonna need it. The what do you call this? The statements. When so a balance sheet, that's where you're gonna see that accounting equation. For now, you just have to know it. But the important thing now it's those debits and credits that I showed you. I get for an asset on the debit side, it's a positive. On the credit side, it's a negative. For maybe it's an owner's equity on the credit side is a positive, on the debit side is a negative. For expenses on the debit side is a positive, on the credit side is a negative. For income on the credit side is a what do you call this? On the credit side is a negative, on the debit side is a positive, and then for liability on the credit side is a negative, on the debit side is a positive, right? So those ones, like you have to know those things like through and through, right? And I suggest also like we keep a happily list, yeah, thing. So you're gonna have a list. O buang gore, okay, these are the assets. So that like what do you name it? So the number one asset ke bank, or one petty cash loan ke asset, investment account, all of these things are assets. One. Then you also have other assets like vehicles and whatnot. So every time like open an asset, like it fella mo listing you so that you know what an asset is like and you can identify it, right? And then the income. So every time you see an income is something like more grandchildren thing, right? So let's say I'm gonna give you examples. So you get maybe money from your father or ring, so that's income. So you have to have your income accounts, then expenses, what you pay, right? And then liability, it's going to be rare for to get liabilities, but sometimes you do get liabilities, right? Yeah. So that's basically it. So I'm gonna get into the examples, and then yeah, then I also have an exercise for of 20 items ke batlang go di etsa. So right now I'm just gonna do the examples using these three examples, and then the rest you'll do. Yeah. So I'm gonna start with the first one. So the first one is so yeah, let me just yeah, example, right? So the first one, um they said the first one, it says okay, let's see the scenario. So the scenario says we are the bookkeeper of a young wealthy spender. John Musk recorded his daily transactions for the month of September, right? So it says John spent 1,000 on clothes from Woolworths on the 15th of September, right? So the first thing you're gonna do, right? So key format that day, right? So the first thing you're gonna do is the date, right? So the date is 15 September 2023, right? That's what you have first. And then after you're done with the date, the second thing is now we'll check out what happened, right? So they say he spent 1,000 on clothes, right? So the first thing I get like a cash basis. So like I said, cash basis in most cases there will be like a bank account, right? So we spend 1,000 on clothes. So meaning that that money it's a bank account, right? It's from the bank account. So what are you gonna do? Bank is a what do you call this? Bank is a asset, right? And an asset it becomes less on the credit side. So you're gonna credit bank, right? That's the first thing. You're gonna credit bank. And then what did he spend it on? Right? He spent it on clothes, right? Clothes from Woolworths, right? So therefore clothes are the expense, right? So you're gonna debit clothes, yeah, and then credit a bank with the 1,000 like this. So it will be debit um clothes, right? And credit um bank, I get with 1,000. Yeah. So that's the first journal entry, right? And then the last thing that you do more journal entry, give it to a journal narration, right? So journal narration, you just explain what happened, right? So you can just say bought clothes from Woolworths. Yeah, I want that's the first journal entry, right? And then we go to the second one. I get they said he also he also bought an iPhone from Mall of Africa for 20,000 and paid a parking ticket of 50 Rand on the same day, 5 September. So the first thing we start with, like I said, get date, 5 September 2023, right? Now, as you can see in this thing, there's two transactions, right? So there's one for the iPhone and one for the parking ticket. So we're gonna do two transactions. So what happened? He bought an iPhone, I get for um I got he bought an iPhone for 20,000, right? So go tlo etsagalang? So it's going to happen what? So what cash account are you gonna use here? Because I get cash basis. It's gonna be bank again, right? So he bought an iPhone from all of Africa for 20,000, right? And then so what happens is obviously bank is an asset, right? And a bank it decreased because he bought the iPhone. So the bank decreased, right? So where does bank decrease? Credit side, meaning that you have to debit the expense, I guess. So he the expense here is the iPhone, right? So you're just gonna say phone, um, debit phone, and then credit bank, 20,000, right? And then general narration, bought iPhone from Mall of Africa. Yeah. So that's the first transaction, right? And then for the second one, and pay the car ticket of that on the same day. So yeah, it's on the same date, so we don't have to write the date again. Re ka nna re qala fela ka debit. So what happened? He paid for a parking ticket, right? We are using the cash basis. What cash account did he use? Bank, right? Because nothing odd happened. Like I said, like you're gonna see them really, like it's gonna be rare for you to see them. I doubt even any of these examples have them. One. The main one maybe you might see ke petty cash, and like I said, ke physical money. So here there is no physical money. The parking ticket, they didn't tell you or he paid using cash or anything. So you assume gore it's a bank. So he paid using bank account. Obviously, money went out. Therefore, the bank decreased. Bank decreases on the credit side. So we are gonna debit what the parking ticket, which is the expense, and then we are going to credit bank. And the amount is 50. Yeah, 50. So general narration here, it over paid parking ticket at Mall of Africa. Yeah. Yeah. So that's for number 2. Yeah, that's for number 2. And then for the final example, which is number 3, let's see what it says. It says John received 95,000 from his father and immediately withdrew 10,000, and he used 3,000 of the cash withdrawn to purchase sneakers from Nike store on 2 November. Right. So as you can see, there are many things that happen. So let's isolate the transactions first. So firstly, John received 95,000. Let's record that one first. So the date is 2 September, 2 September 2023, right? And he received, right, 95,000 from his father, right? So what cash account are we using? Bank, right? And what happened to bank? It increased. Bank increases on the debit side, so we debit bank, and then we create the other account. The other account in this case is what? It's income, right, from his dad. So we can just say dad. And then bank, 95,000. 95,000, right? And then general narration, right? Income received from dad, right? Yeah. So that's the first transaction there. Let's look at what happened next from his father. And he immediately withdrew 10,000, right? So let's do the transaction for the 10,000 that he withdrew, right? So what happened when he withdrew 10,000? What cash account is there, right? So firstly, there is bank, right? Definitely there is bank. What happened to the bank? It decreased, right? Because how we draw a shelter decrease, like more account too. So the bank decreased, but what do we debit now? After you withdraw the money, what do you have? You have physical money, right? And a physical money, petty cash is what? Is an asset. An asset what increases on the debit side because your physical money increases. Tšhelete o e tshwere mo letsogong ya increase because we withdraw the tšhelete, right? So we're gonna debit petty cash and then credit bank with the 10,000, right? And then general narration, I think it over cash withdrawn from ATM. Yeah. Then still on the same day and used 3,000 of the cash withdrawn to purchase Nike to purchase sneakers from the Nike store. So o basically o rekile di-sneaker ka tšhelete e o e withdrawileng, right? So what will happen? What cash account is used here? Obviously not bank, I want because as long as swipe for tšhelete, but really over it's petty cash, meaning the physical money, meaning that this is the cash account that you're gonna use, right? Petty cash. So what happened to the petty cash? It decreased. It decreased, right? Because re patetse tšhelete, so the money that we had on hand now it decreases actually 10,000. It decreases to 3,000. Petty cash is what is an asset. Asset it decreases, so asset it decreases on the credit side. So we are gonna credit petty cash, and what are we gonna debit? O patetse di-sneakers, so we are gonna debit sneakers. Right? So we're gonna debit sneakers, and then we are gonna credit um petty cash. Thousand, 9,000. Then general narration it over um bought sneakers at Nike store. Yeah. You don't have to tell them or you used you don't have to tell them or you used the cash that you withdrew because petty cash I want, and then that's basically the general entries. I want these are the general entries for the example. I want, yeah. Then obviously you'll tell me via WhatsApp if you have any questions. Yeah. Okay, that's it.